In 2025, the Omnibus Budget Reconciliation Act introduced a new deduction for personal car loan interest. The blogosphere erupted with simplified headlines. Every major large language model, ChatGPT, Claude, Gemini, learned from those headlines. Asked where the deduction sits in the tax calculation, all three returned the same wrong answer. The error has a name: consensus error. Large language models do not reason like a jurist. They query an internal parameter space for the most likely sequence of words. When thousands of blog posts say one thing and one statute says another, the model converges on the blogs. Probabilistic AI cannot be prompted into deterministic law. The architecture itself must change. The deduction sits in IRC Section 63, taxable income. It does not sit in Section 62, adjusted gross income. Section 62 deductions lower AGI. They unlock thresholds for Medicare premiums, medical expense floors, student loan repayment, and state taxes that couple to federal AGI. Section 63 deductions do none of this. Filed under the wrong section, the same dollar of deduction creates state audit risk, premium overpayment, and federal underpayment. Retrieval augmented generation does not solve this. The model retrieves the statute and still misreads it because its weights were tuned on the blogs. REG fixes retrieval. It does not fix reasoning. The architectural answer is Neuro-Symbolic AI. The neural layer handles the messy conversational input: a user asking whether a Tesla qualifies, a vendor invoice, a ledger line. The symbolic layer holds the law. Statutes are encoded into Catala, a domain-specific language developed by IRC and used by the French tax authority that compiles statutory text into mathematically verifiable code. Exceptions and defaults compile correctly by construction. Section 163 subsection H paragraph 1 prohibits the personal interest deduction. Section 163 subsection H paragraph 4 creates the qualified passenger vehicle loan interest exception. The knowledge graph encodes that paragraph 4 is the exception to paragraph 1. It encodes that the exception caps at $10,000 per year. It encodes the phase-out: $200 reduced for each $1,000 of modified, adjusted gross income above $100,000 for single filers. The deduction vanishes entirely at $150,000. The neural layer extracts the entity. The symbolic layer applies the law. The neural layer renders the answer. The deduction is denied or allowed by the symbolic layer, and the neural layer has no freedom to hallucinate yes. Three vendors, ChatGPT, Claude, Gemini, produce the same hallucination on the OBBBA question. The Veriprajna reference architecture, the deterministic tax engine, encodes the OBBBA provisions in Catala and surfaces a hard block when the vehicle's assembly origin fails the United States requirement. The phase-out is computed by answer set programming, not by transformer attention. The reporting obligation under IRC Section 6050A, the lender's filing burden, is enforced by the symbolic layer, not omitted because the blogs ignored it. Penalties under Sections 6721 and 6722 remain the same. Auditability changes from low to high. The traversal path is the output. For an enterprise finance leader, the choice is between two stances toward audit risk. The wrapper is a black box interpretation of the IRC. The engine is a logic traceable audit trail. Compliance teams cannot defend a black box hallucination in front of an IRS examiner. They can defend a Catala compiled statute that returns denied, reason: phase out exceeded. Probabilistic AI has no place in deterministic statute. We engineer deterministic tax engines for finance and compliance teams. The argument, the architecture, the engineering blueprint. Inside,